What do you think people should do?
So I think to the debate you were just having, we really think that the important thing is to be barbelled and how you're taking on risk going into 2021. As you said, the first half of the year is going to be choppy. Being in a place where you're still capitalizing on those secular tailwinds around quality, around some of the technology names, that's going to be important. But we also think that being selective around cyclicals is also going to be an important part of a barbelled risk strategy going into 2021. So being selective around U.S. small cap, emerging market equities on one hand, while in our judgment still being cautious around value, around Europe and Japan, some of the more structurally challenged areas of the market that are going to have headwinds regardless of what we see in 2021 is the right approach.
Mike, that's where the biggest move has been this week in the European part of the market. Just walk me through why there specifically you'd be a little bit more reluctant.
Yeah, so we would say, it's still a market that's heavily concentrated in the financials and energy, parts of the market that even if they have a bounce over a handful of days, are going to struggle against the secular headwinds that are there and have been there now for, upwards of a decade. So to our eyes, there's better ways of taking on cyclical exposure than that. So we'd point again to places like emerging market equities, perhaps especially in Asia. We'd point to places like U.S. small cap that we think could really benefit in the back half of 2021 from a significant kind of cyclical reacceleration. So it's all about being selective around your cyclicals and figuring out the places that can outperform and the places that still face structural headwinds.
Embedded in that call on EM, Mike, which keeps coming up on this program again and again and again, is there a dollar weaker call just as the base case at the epicenter of that view?
Yeah, so I think we would take the view that the dollar is broadly stable to a little weaker going into 2021. Certainly, a world where we see kind of rates pretty contained in the U.S., where if anything, maybe inflation break-evens widen out a bit and push real rates lower. That's a position, that's a posture that's probably slightly dollar weakening. But stability to weaker is, as you said, a kind of good environment for emerging markets, especially equities. Those easier financial conditions allow activity to bounce back or have an additional tailwind. So, yeah,